Hi everyone, welcome back to my channel. So today we'll be talking about credit scores, and I have my lovely sister here with me.
Hi.
Kemi, and she was previously a mortgage advisor, but she will talk more about that. And so, do you want to introduce yourself?
Hi everyone, I'm Kemi. I qualified as a mortgage advisor in 2012, but prior to that I was an estate agent. So to give you a little bit of background about myself, I come from a media and sociology background, that was my degree, and I worked for a religious organisation for a few years, and then I decided that I was really interested in properties, so I thought, why not be an estate agent? And it may sound a little bit weird to some people, but I really wanted to understand the market and understand why people buy and what motivates people to buy, especially people who purchase buy-to-let properties. So I became an estate agent end of 2009, and it really gave me an insight as to how people own multiple properties, how they're managed and so forth, and also to the estate agency world, how that works. Getting good with the estate agent is very, very key. So in 2012 I took my CMAP exams and became qualified as a mortgage broker, and then I moved on to work for a bank for 3 years and then moved to another bank, and now I am back to being a broker. So my husband and I, we own a few properties, and we have a business together. I think that's about it. And I have an amazing son called Samuel.
Yeah, so that's a great summary of Kemi and her experience and how she would have assisted me basically in purchasing my first property. So she mentioned that she's CMAP qualified. I'm also CMAP qualified, but because I didn't go into banking or basically becoming a mortgage advisor, Kemi's much more knowledgeable in that field than I am. So I thought it would be great to do this video with Kemi. And I have some questions to ask her. Okay, so my first question is, what is a credit score?
Okay, to put it very simply, a credit score is like a numerical analysis of your credit files or your lack of credit files, which gives a lender an idea of your credit worthiness. So let's just say between 1 and 10, and 10 being the highest, if your credit score is 1, that could be A, because you've got really bad credit, or B, you have no credit. Does that make sense?
That makes sense.
So it's a number just to let any lender know whether you're worthy of credit based on how you've managed credit in the past or how you haven't managed credit in the past.
Question number 2, is my income impacted by my credit score?
No.
Okay, so it doesn't matter how much I earn. That's not the way it works.
No, it doesn't work like that. I know a lot of people think that the amount that you earn affects how much, well, it does affect how much a bank can lend you in terms of property, but in terms of your credit score, no, it doesn't. Your credit score is, as I said before, it's how you manage credit that you're given, and credit doesn't have to be a credit card. It can be a phone bill, it can be a utility bill. Credit, as I said, is not monetary. It doesn't have to be solely monetary.
How does a credit score impact my mortgage application?
So would you like me to go through the mortgage application process on how we do it? Okay. So when you find a house, or if you want to find out how much a bank can lend you, your credit score is really important, because, as I said before, it tells us about your credit worthiness. It lets us know that if we're going to, as a lender, borrow you 250,000, I need to make sure that I'm going to get that money back. You know, okay, well, not me, but the lender. Yeah. So your credit score, what we as a lender would do is we would check your credit score against certain credit reference agencies to see how you've managed credit over a certain amount of years, to see how many footprints you have in your credit history. So an example of footprints is, this is another thing where people get caught out as well. When you're looking for car insurance and you go to certain websites and you're just trying to find out who has the cheapest insurance, that leaves a footprint on your credit history for 12 months, and each time you do a credit search on your name, that footprint, as I said, it stays there for 12 months. We're here oftentimes just to let you know that we will be conducting a credit search, and this will leave a footprint on your credit history which may affect your ability to attain credit in the future. So if you've had too many credit searches, as a lender we may look at it and think, why are they so keen to, why is there so many searches on your account? Is it that they're desperate for money? Can they not manage money? So that's the point as to how your credit search could affect your ability to get a mortgage. So we need to know that at all points you can keep up with your monthly mortgage repayments. And if in the past you've had things such as CCJs, county court judgments, that's an example of you not being able to manage your money. Okay, if you've had defaults, again, it's an example of you not being able to manage your money or the credit that's been given to you as well. Things like late payments as well. It is what it says. It's a late payment. So we need to make sure that your credit score is as high as possible, because we know that this 250,000 that we're about to lend you, we will get it back. There are some unfortunate situations where people, sometimes in uni, they take out certain accounts and store cards and they forget how much money that they've actually put on it, and that you could have a CCJ and not even know about it, especially if you've moved address a lot of the time. So in instances like that, depending on who you bank with, there are some instances that I've personally dealt with where we're able to write to the underwriters and explain what's happening. If people aren't aware of a CCJ or default, the moment they find out, they normally clear it, write to Experian, just try and make us aware that I wasn't aware of this happened X amount of years ago, I've cleared it now. And sometimes an underwriter can take a view on that, depending again on your internal credit score within the bank. So not only do you have a credit score with credit reference agencies, but your bank will credit score you as well, and they'll look at things like whether you're using your credit card, the amount of money that you put into your account, how much money goes out, are you withdrawing more money than you're paying in, are you constantly in your overdraft every month, are you in your unarranged overdraft every month? If so, why is that? That's not a great example, and it's not showing us that you know how to effectively manage your money. Have I answered the question?
Yeah. Okay. So at what point exactly do they conduct the search?
Okay, so I think what a lot of people get mixed up with is that they want to do a credit search to find out how much they can borrow quite early on in the process. But my advice, and a lot of the people that I've worked with, is don't be too fast to do that, because remember I said that every time you do a credit search on your name, it leaves a footprint. So if your credit score is at, I don't know, let's just say 700, and you do a credit search, it may go down to, I don't know, 658 or 680. These are just numbers. I'm not saying that that's just how it works. It doesn't go down in increments of 10, but every time you do a credit search, it does leave a footprint. So it's really important that you're just not doing it too early. So the way that I've been trained to do it, and the process that I like to follow, is that you would sit down with a mortgage advisor or a broker, and you do what's called an affordability calculator, and you can do affordability calculators online as well. So the affordability calculator, again, as long as you're being truthful and honest about how much you're earning, how much your outgoings are, debts and credit commitments and so forth, then the amount that the affordability calculator gives you should be, give or take 10%, not even 10%, it should be pretty much accurate. So you do the affordability calculator, and that will give you a rough amount as to how much a bank will lend you, and then you can go out and start looking at properties, because you know how much the bank could potentially lend you, you know how much of a deposit you've got, so you know what the price range of a property you're looking at. When you do find a property, a mortgage advisor again will go into a little bit more detail as to your credit commitments and things like that, and that's when a credit search should take place. I do know that there are some banks and some mortgage brokers who say that they'll do a soft search first, which doesn't leave a footprint on your credit history, which is okay, but a soft search is a soft search, it's not a full search. So it could be that it turns out okay, but then when it comes to the actual application and you do a full credit search, there are people I know that have just outright been declined and it's passed the soft search. So that's why it's really important and key to keep an eye on your credit report. You know, check it monthly so you know what's going on. If there's anything, any grey areas, clear them up before it comes to the point of buying property.
Okay. So you mentioned soft searches and hard searches. That was also going to be one of my questions. So some people may not know the difference. What is the difference between a soft search and a hard search?
Okay. So I think I kind of touched on it already, that a soft search is it looks at the surface. You know, it doesn't go into as much detail. So it'll just look at the surface. Just, you know, it'll look at your credit score. It'll make sure that maybe there isn't any adverse credit there. The hard search, or what we term as a full credit search, will go into all the detail. So it will look at missed payments or defaults or late payments and how much credit you're using, how much credit you've been given. So say for instance, if you have a credit card with £1,000 balance and with £1,000 limit and your balance is £980, then we'd look at that and we'd look at your income. So it'd go into a lot of things. There's all factors that are taken into consideration with a full credit search.
So what ways can the people at home improve their credit scores?
Okay. So to improve your credit score, I would say, now all of this is, you've got to be responsible for absolutely everything. So a credit card demonstrates your ability to, number one, obtain, number two, maintain credit, as long as you use it properly. So get yourself a credit card and use it, but use it wisely, and set a direct debit to clear that balance every month. Don't let it roll, just know that I'm using it and I have a direct debit coming from my current account to clear it every month. So credit card is one. Number two is something that I know a lot of people are not aware of. I've had examples where, and myself I'm one of the people where no credit cards, no loans, but still not able to obtain a mortgage. And that's because of the electoral register. Some of you may not have any interest in voting, but signing up to the electoral register, whether you vote or not, is also very, very key. That helps your credit report. The other thing is pay your bills on time. You know, if you've got if you're paying council tax or any utility bills, pay them on time as well. So I guess the common things in how to improve your credit score is keeping up with your payments, just, you know, managing your credit effectively and keeping an eye on it. The electoral roll, if you're not registered on there, please definitely do it. But just learn how to manage your credit. Don't be afraid to sign up to certain credit reference agencies. Some are free, some are not. The ones that aren't free are the ones that a lot of the lenders tend to use more, just because they hold a lot of information about you. So keep an eye on that as well. And if you see anything, the great thing about these credit reference agencies is that if you see something that's not right, you can call them, talk to them about it, and if it's wrong, then they can remove it. Just make sure that you're keeping an eye on your credit, and if there is anything that's adverse, sort it out now. Don't wait until you get a mortgage. Don't think that it's only £50 I've got a CCJ for. It's a small amount of money compared to how much I'm earning. A CCJ is a CCJ, as is a default. And those things are in your credit history for years. So if you're looking to get a mortgage and you know you've got one of those things, clear it off.
So how long does negative information stay on a person's credit report for?
It depends on what it is. So I guess the most common types of negative information are the really serious ones that can affect your ability to obtain a mortgage are CCJs, character court judgments, defaults, and bankruptcy. But from my experience is that when people declare themselves bankrupt, they see it as like the only solution. It's not, and there are so many ways that lenders, not just banks, but lenders are supposed to help you before you get to the point of declaring yourself bankrupt. So just avoid avoid that, because bankruptcy stays on your history for 6 years, and even when you're discharged from being a bankrupt, it's very, very difficult to get yourself back up again, because it affects your ability to even get a current account. You know, if you've declared yourself bankrupt, you can only get a basic account, which is a cash card. So forget about internet shopping, forget about using your card in the shop. It's not going to work. You won't get it. It's a basic account, which basic accounts are for the most common use of them is for people who have just come to the country and they've got like nothing, no credit history or anything like that. So be very, very careful about declaring yourself bankrupt. Even if your bankruptcy was 6 years, well, I don't know, let's just say 8 years, 8 years ago, and you came to me for a mortgage, I would have a very hard time finding a lender who would borrow you any money, and I'd have to go to what's called a subprime lender. And those subprime lenders are lenders who are not high street banks. They're very small, and their interest rates are most likely through the roof, and you wouldn't have the, I guess I could call it a privilege, you wouldn't have the privilege of being able to put down a 10% deposit. They may ask for 75% or 50%, so you know, the long-term effects of declaring yourself bankrupt far outweigh writing off a debt of like £2,000. So be very, very careful about that. And then we have the CCJs, which again is saying your credit history for 6 years as well. But CCJs, as long as you have paid the CCJ, some people let the CCJ run for 6 years until it's cleared. Some people pay it off, and then after 3 years, there are some lenders, depending on how long you've banked with them, as I said before, who would still consider borrowing you money. Defaults as well. Defaults they're not as bad as CCJs. Sometimes defaults aren't your fault. I've had quite a few cases where we've been able to write to the underwriter and explain what's happened with the default, and they've taken a chance, and you know, the person, 2 people went on to buy with 10% deposits. So again, maintaining a great relationship with your bank is so key, and not moving banks like, you know, like you're changing cars, or I don't know what the saying is, but yeah, just be careful with how many times like you're switching bank accounts and things like that.
So what would be considered a good credit score?
Depending on which credit reference agency you're with, I don't know, like a credit score of 999 is great, that's excellent. But then you've got some credit reference agencies that, you know, you have poor, fair, good, very good, excellent, and you can have a credit score that's good, that's just good. You can have, I don't know, 75k in the bank, a good credit score, but then you may still not get a mortgage just because you don't really have that much credit. So good doesn't necessarily mean that you can get a mortgage, it just means it's good in terms of a number. So I can't say that this number's great, that number's great, because there are so many factors that work together to give you a good credit score. You know, if you have I don't know, a credit card with a limit of £250, and your credit score is very good, doesn't necessarily mean you're going to get a mortgage. You know, there's so many things that work together with it.
I think that was a good point, because during my process I was actually rejected from a building society because I didn't have enough credit for them anyway. But then obviously my mortgage at the moment is with Santander, which is a big high street bank, so it really depends on what they consider good credit or enough history. So I think I too can attest to the fact that different lenders treated me differently and saw my credit score as good or not so good.
Yeah, and a lot of, I guess with a lot of the building societies, a lot of people, they want to go to the building society first because they tend to have really good rates.
Yeah.
But in terms of application to mortgage offer rate, take a good look at that, because a lot of the time it's not that great, and that's just because they're small lenders and they would scrutinise everything because they're not that big. Sometimes I can't afford to take that much of a risk on someone who's really young and doesn't really have that much credit history, whereas the bigger lenders, they've got a little bit more money to play around with, and they're a high street bank for a reason.
Okay, so someone around my age is probably likely to be looking for a mortgage, and somebody who's in a relationship is also likely to be looking to get a mortgage soon. Likely, it's not compulsory. So if someone was looking to get married, how would that impact their credit score?
If they were looking to get married or if they weren't married?
Okay, so let's say they are married.
Okay. So there are so many different factors which work together to give you a credit score. So first of all, when you are married, obviously you'll have linked addresses. You may change your name straight away. If you were like me, it took me a while to change my name, and that was because I went to the bank and I realised how long the process was. Well, purely because I didn't have the right documents, and then I just couldn't be bothered. But B, my husband and I decided that at first we wanted 2 lines of credit. So I didn't change my name at first, but obviously you have the linked addresses. So if, say for instance, I had really bad credit and my husband had good credit, I would say I would limit the amount of joint applications we would do together, because if my husband is the one with the good credit, the credits, all the searches that we're doing, remember the searches stay on credit history for 12 months, so we're going to be doing multiple credit searches. My credit's already bad, so therefore my credit's going to get worse. But then he's got great credit, but every time you're doing a credit search, that's lowering his credit score. And if we're trying to get credit and we're being declined, that means we're going to go to multiple lenders, which again doesn't look good, because you're having too many credit searches. So what will link you together when you're married? A, the name, B, the address, C, the number of joint applications that you have together as well.
So what key things are there to look out for in terms of credit scores? Any other information that you have for us?
I would say, I think I spoke about it before, excess credit, or using a lot of your credit. So again, if you have a credit card and your limit is £1,000 and you're using £980 of it, it doesn't look great. It shows that you're using over 90% of your credit, your available credit. So just look out for things like that. Having worked in a bank, I do know a lot of people would say, just keep my credit card limit as low as possible, because I don't trust myself. But banks are so advanced now that you can get text messages if your credit limit reaches 500, 600, there's so many things that will help you to keep on top of it. Because the best thing to do is that if they're offering you a 5k credit card limit, take it. And if you're going to spend £200 a month on it, even better, it just means you're not using all of your credit, you know.
I think I was one of those people, to be honest with you. I went to the bank to get a credit card, and they said to me, okay, I'll give you whatever amount. I said, no, that's too high, I don't need that much. And then the guy even said to me, usually people are asking for more credit and you're asking me to put it down.
Yeah.
So I obviously wasn't knowledgeable.
Phone bills are so important, you know. We switch phone bills. I guess now it's more 18 and 24 month contracts. Before, where there were 6-month contracts and 12-month contracts, I'm really showing my age here. It was people would change their contracts, and sometimes they'd say, well, I'm not using a phone, therefore you can't charge me. You can see that I haven't switched on the phone, I haven't made a phone call, I haven't received any phone calls. And then the phone company will just slap a CCJ on your history, and you won't even realise until you've applied for a mortgage, it gets declined, and I say, well, you've got something on your credit history, go and have a look and see what it is, and you find you've got a CCJ for a phone that you haven't even used, and you end up paying it. So if you are changing phone providers, make sure that they have closed down that line and they're not charging you for it. And if they're sending you bills for it as well,
call them.
Don't ignore it. The other thing, we spoke briefly about linked addresses as well. So if you're someone who rents, or you've just bought a new house, or you've just moved into a house, and if that residence is just solely yours, it's really important that if letters are coming for previous owners or occupiers, I'm not saying just go and like open everyone's letters, but I think you'd kind of know which ones are coming from like debt collection and things like that. Open them, call the company, let the company know this person does not live here anymore. Because when you do return to sender, I don't know how many times those letters actually go back. People just keep sending it. Most people will know that when you apply for jobs, credit, anything, they will ask you your last 3 years address history. Please just, I know sometimes we can't, situations and things happen, but just the multiple address histories sometimes as a lender, especially if you haven't got great credit, and then we see that we've got multiple address histories over the past 3 years, we're going to ask a lot of questions as to why you're moving house a lot. In your rent, so earlier this year, well, it's not earlier this year, it was a few months ago, there was when there was discussing the budget, there's a new initiative which I think should be launching in 2019. I need to get the proper name, but I'm sure Tenny can add it at the bottom somewhere. I don't know how the YouTube thing works, but yeah. So what's going to happen is that your rental payments will now form part of your credit history, which I think is absolutely amazing, because we live in a generation of renting, and if you're renting for 6 years whilst you're trying to save, or you know, you're living at home with your mum and you're paying bills and you're paying her rent, but nothing's happening to your credit just because you're trying to save money, it's really unfair. So a lot of the renters have been at a disadvantage. I mean, the good thing is that sometimes you can see the rent payments on bank statements, but wouldn't it be great if your rental payments formed part of your credit history? I think that would help a lot of people. So Tenny, definitely, once I get the proper name for it, put it on the bottom of the screen and look into it, keep up with your rental payments as well. Okay, so another thing that to look out for are payday loans. Please stay away from payday loans. Gambling websites as well. And I mean, some people, you know, they go to casinos and things like that. I mean, going to a casino every once in a while isn't a big deal. You know, sometimes work nights out, or if that's your pleasure, you know. But if we see that you're gambling quite often, or you're going to payday loans, we're thinking, what are you doing with the money that you're earning? Why is it that every month you're going to these casinos, or you're using gambling websites? It doesn't reflect well on your money management. Payday loans, I don't want to say the companies. Why would you go to a payday loan company whose interest rates are 2,000% or above? Why would you do that when there are high street lenders who have bank loans that are like 3.5? You know, so again, that will make us question, okay, your credit worthiness. Are you managing money properly? Payday loans, they only lend up to a certain amount. What are you doing with that? Why do you need that money? You know, so there's a lot of questions around things like that.
So it shows a lack of good judgment.
Exactly. Another thing is debt management programs. So you know those adverts when they say you could pay off your loan with as little as £1 a month? No, do not do it. There are questions now for some lenders. Have you ever entered into a debt management program? If you tick yes on that box, that is it. You know, I would, so normally if someone's applying for a mortgage, I'll do the pre-screening. I'll ask you about things like CCJs, defaults, things like that. Just be honest with me. Payday loans, debt management programs. If you've told me that you have a debt management program, let's just cut the conversation there. It's not going to work. You might have to go to a subprime lender or a smaller lender who's willing to take a chance. But again, your deposit will be higher, interest rates will be higher as well, and yeah, it's quite great.
Okay, well, thank you, Kemi. Those are all the questions that I have. If anyone has any other questions, please leave them in the comment section below, and I will ask Kemi and then get back to you. Or if I know the answer, because I'll be honest, sometimes I do know the answer. So if I can answer it, I will answer it. But if not, I will ask Kemi. And that's it from both of us. So yeah, thank you for coming on my show.
Thanks.